Hey everyone, I'm Shannon Terrell, Senior Writer for Finder.com's share trading and investing channel. And today we're going to get into Robinhood's IPO. The pros, the cons, the financials, the headlines, plus how to actually purchase the stock once it goes live. Let's get into it. So what do we actually know about Robinhood's upcoming public debut? Well, we know that the platform plans to go public on the NASDAQ under the ticker symbol HOOD. We know that Goldman Sachs and JP Morgan are underwriting the deal, and we know the company is targeting a valuation in the $40 billion range. We've even heard that Robinhood may allocate up to 35% of its shares to its retail customers, a move that could serve to show off Robinhood's bright and shiny new pre-market IPO feature. But as for when the stock will go live and at what price, it's too early to say. So if you are interested in picking up some Robinhood stock, keep an eye on the headlines for news of the platform's debut. Or you could just visit our Robinhood IPO page. We're updating it regularly in the lead up to the stock's launch. You'll find the link in the description box. Oh boy, where to begin? Robinhood is one of the most popular trading platforms in the US. It has over 18 million accounts, and it states in its S1 filing that it believes nearly 50% of all new trading accounts opened in the US from 2016 to 2021 were opened with, you guessed it, Robinhood. So, how did it get to be so popular? Well, marketing campaigns aside, the company pioneered the commission-free trading model, a move that shifted the landscape for retail trading platforms and ultimately forced a lot of its competitors to follow suit. Now, combine a highly popular platform with a series of spicy news headlines, and you've got recipe for major IPO hype. Anyone following Robinhood's press appearances can attest to just how often this platform has made headlines. It took flack for service outages at the start of the coronavirus pandemic. It received criticism for its gamification of trading and its lack of transparency around payment for order flow. And of course, who can forget the meme stock fiasco? Robinhood put a pause on GameStop, AMC, and BlackBerry trades in early 2021 in response to Redditor-induced trading craze. The freeze only lasted a matter of hours, and Robinhood wasn't the only brokerage to pause trading, but the move made traders furious, and the backlash was unforgiving. So why invest in Robinhood? Well, the company is popular. There's no denying that. And according to its recent financial data, it's profitable, or at least it was last year. Robinhood reported $277 million in revenue for 2019 and $958 million in revenue for 2020, an exponential jump. And while it lost just over $100 million in 2019, Robinhood did quite well in 2020, reporting a profit of over $7 million for the year. Now, I like rising profits and falling losses. That's a promising trend. And when you combine that with Robinhood's widespread popularity and the fact that it went from 289 employees in 2018 to over 2,000 employees in 2021, that looks like a company poised to continue its growth trajectory. But popularity and rising profits are not enough to make Robinhood a sure bet. So, before you add it to your watch list, consider these drawbacks. If there's one thing that we've learned about Robinhood over the past year or so, it's that it's far from infallible and certainly not immune to public criticism. If anything, its popularity shines a spotlight on its internal activity and subjects it to a scrutiny that its competitors just don't need to deal with. Speaking of which, Robinhood got slapped with a $70 million fine by the Financial Industry Regulatory Authority, the largest in FINRA's history, covering alleged violations from 2016 to 2021, including service outages in March 2020 and inaccurate cash balances on Robinhood accounts, which forced its customers to lose money. Robinhood's popularity is a double-edged sword. It's gotten a lot of bad press. Plus, it's got some serious competitors in the ring, including Webull, Public, SoFi, and TD Ameritrade. These brokerages have leveled the playing field by dropping commissions, and they've added platform options with more comprehensive account lineups and more sophisticated research tools. Robinhood isn't the only player on the field, and it's made a number of headlines that don't reflect positively on its platform. The service is popular now, but there's just no guarantee that it'll keep its customer base. So, you've sifted through the hype and you've weighed the pros and the cons. Now, how do you actually go about adding Robinhood to your portfolio? Here's a look at the buying process on the Robinhood app. First, find Robinhood. Sign into your online account and search for Robinhood, either by its name or its ticker symbol, HOOD. Next, select your order type. A market order will execute your order right away at the current market price. A limit order delays your purchase until the stock hits your desired price. Then you'll want to select the number of shares and make sure that you have enough money in your account to complete the trade. Finally, review and submit. When you're ready, swipe up on the screen to submit your order. And that's it. You're officially a Robinhood shareholder. Robinhood's IPO will likely be one of the biggest of the year, but that doesn't mean it's a buy. Before you make any trading decisions, do your research and vet the company yourself. And check back to our Robinhood IPO page often for the latest updates on its public debut. It's linked in the description box below. And if you like this video, hit the subscribe button so that you'll be the first to know when new Finder videos drop. Thanks for watching.